All righty, we are live. Go so off to a hot start already. But anyway, guys, in the last few weeks, we've seen quite a few stocks raise their dividends. And just in my portfolio, if we go over here, a couple of them that have raised them are Main Street Capital Corporation, which announced a 2.1% raise just a couple of days ago on Wednesday. And then another one was AbbVie, who announced a dividend raise about a week or so ago, a little bit higher than Main Street at 4.7%. Now, in both cases, the raises here haven't been anything too crazy, especially when you compare that to something like Visa here, who announced a crazy 15.6% share buyback or a 15% dividend increase with a $25 billion share buyback. The Main Street raise and the AbbVie raise were, a bit small in comparison to that. And I've got to say, as someone who's not a Visa shareholder, I, have been very jealous of those Visa shareholders getting that substantial raise, and I personally have been fiending for a double-digit dividend increase myself, like what we saw with Visa, and I am proud to announce that I just got one in my portfolio. Just got one, nearly 15%. This one company just announced it, and we're going to be talking all about that in tonight's live stream. But before we get into that, guys, welcome to another Dividend Happy Hour. I'm so stoked to be back with you guys for another week. Hope you guys had a fantastic week. It was very interesting to say the least. But why don't we kick it off with a quick cheers? So grab your drinks, whatever you're sipping on tonight. Personally, I just got a little bit of water here with some like blue flavoring. Really good stuff. But anyway, guys, let's do a quick toast to why don't we cheers to one heck of a boomerang week. That's exactly what it was. It was a boomerang. It just, I don't know about you guys, but pretty much all the gains or all the losses rather that I had in my portfolio, I've gained back just in the last 2 or 3 days. So, and it's a double-edged sword. This is the double-edged sword of dividend investing, but I'm not going to be mad about that. Not going to be mad about making money. So let's drink to that, I suppose. Cheers. And cheers to all of you guys out there tuning in tonight. Let me know a few things here in the live chat or in the comments below if you're watching the replay. Number one, which stocks did you pick up this week? I'm curious to know what you added to your portfolio. Number two, what are you sipping on tonight? What did you bring to drink to the Dividend Happy Hour? Let me know that. And also number three, you celebrating any milestones in your portfolio? Did anything cool happen? Did you, hit, maybe you hit $10,000 in your portfolio, or maybe you got your first, maybe last month was your first $100 month of dividend income. Anything cool like that happened for you guys? I want to hear about it. Let me know that in the live chat. We'll give some shout outs or in the comments below if you're watching the replay. Now, let me go through the chat real quick and say what's up to everyone here. I'm going to scroll up to the top. I see my man Kevin in the building. I got Luis here. We've got Amadou. How's it going? We got Adon here, says, funny. So since you're streaming both in the morning and evening on Fridays, I think that makes you a pizza bagel bite, like the 97 jingle, pizza in the morning, pizza in the evening. Yeah, I'll tell you what, I could go for some pizza right now. That sounds pretty bomb. I can't tell you the last time I had pizza, but man, I'm hungry. Really good. So we got Aries, is that how you pronounce that? Aries Audio Hub. Anyway, picked up some more KRC at $27, so that's good stuff. We got Anthony T in the building. We got Stephen. Will, Chris, Adam, Joyce, Duroc. Hopefully I pronounced that right. Dominique's here. We got Striper Kid drinking some moonshine. Wow, that could be dangerous, Striper. Be careful with that stuff. Moonshine's pretty good though. I used to have some of that back in the day, and I always remember really liking moonshine. Let's see. Tommy's here. Coach Tim. What's up, Tim? Let's see. We've got and Joyce over here sipping on a Coke. Classic. We got Robert here. Happy Friday, my friend. Thank you for tuning in. Ben's in the building. Adon said the market had a serious case of hokey pokey. Yes, it did. It absolutely turned itself around. And that's what it's all about. But anyway, let's keep going. We got Rooster Booster here. That is quite the name. Very nice. Picked up some realty income, it looks like. We got B still drinking a Dos Equis. Very nice. Purchased some more SCHD and SCHG. Can't go wrong there. Gorilla Nurse is here. Fabio's here. Anthony's here. Picked up some Chevron and MasterCard. Great buys. Let's see. Ben here picked up some Main Street and Realty Income. Yeah, that 6% yield from Realty Income. Yeah, kind of a hard one not to buy. Let's see. Tommy picked up some Main Street. Backwards Base, some Exxon Mobil. Tim, some KMI. Very nice. Drinking nothing. Have a tournament in the morning. Okay. Good stuff. Let's see. Chris here had a nice little shopping spree. Realty Income, SCHD, American Express, UPS, and Johnson & Johnson. Very cool. Let's see. CA's drinking a Coke. Pick up some more AbbVie and Texas Instruments. Oh, awesome. Let's see. We've got Zachy here. We've got, I said what's up to Dominique already. Cheers to Maine, who's crushing it, and to me, who's walking to 100. Yeah. So I think most of you guys have tuned into the morning stream these last few days. I hope you guys have been enjoying it so far. I've been a streaming machine. It's been a lot of fun. So yeah, thank you guys all for the support on that new live stream series. If not, if this is your first time hearing about it, I started streaming Monday through Friday mornings at 7 a.m. Pacific time, 10 a.m. Eastern time. Today this was like the perfect amount of time today. It was about 28 minutes. I want to keep it between 20, 30 minutes a day. But thank you all for tuning in the morning and also tonight. If you made it to both streams today, I'm very impressed and I really appreciate it. That's awesome. We got Robert here with a $75,000 projected annual dividend income. That is crazy. That's such a huge milestone. Good job, Robert. Great job. Let's see here. Let's keep going. We got Miguel here, picked up some KRC around 27 bucks. Charles is here. We can start, guys. Charles is in. Okay, we're good to go now. Zach, another really cool milestone here. Hit over $100 in dividend income for the first time 2 months ago. Just this past month, I got $82. Great job. Yeah, once you start getting into that, about $100 or so, man, I feel like it really starts to pick up from there. You could really do a lot of damage there. $100, even 82 bucks is no joke. Even $5 of passive income is huge. You know what I mean? We got Dan Lee the Manly in the building. What's good, Dan? Hope you're having a good day. Thanks for tuning in. We got Lucas here. Bought some Palantir, drinking water. You know who I have not seen yet? I haven't seen him for the last few days is Shamir. Shamir, where are you at, man? Hope you're doing okay if you're watching. Jose said, first time in your live, make it interesting. Okay. Thanks. But let's see, let's keep going. So Kurt bought some EPD milestone, $4,500 per year, sipping on a Miller Lite. Man, that's crazy. Great job. What are you rocking there in the in your profile picture, Kurt? Is that a, let's see, you guys don't want to get too close. Don't want to show you my scalp. Was that a bass? You slapping the bass there, or are you rocking the six string? What do you play there? I'm curious. We got Gina drinking a Brazilian drink. Oh, okay. Nice. Oh, Derek. Okay. Sorry about that. We've probably gone over this before. I apologize. Let's keep going here. Charles picked up some Realty Income, Citigroup, and Kenview. Okay. And also kind of while we're on the subject, while I'm thinking about it, any of you guys WP Carry owners, you guys get those spinoff shares, you get some cash. What happened with you guys, all you WP Carry shareholders out there? I talked about it this morning in the stream, but I ended up selling out of my spinoff shares yesterday for not the best price, like I think 11 bucks per share or so. And I think it opened around 20 bucks a share. So I definitely was slow to pull the trigger on that. It's all good though. Let's keep going here. We got Coding with Kenny. First time in the stream. Finally made it to the live stream once. For once. Big fan of your channel. Thanks, Kenny. I really appreciate that. I'm happy to have you tune in, and I'll try my best to make it interesting. Let's see. Yeah, damn. Where is Zal? Zal's hit or miss. He might be busy tonight. So let's go through a couple more. Just get caught up here in the. Get caught up here in the chat, see what's going on. We got Kevin Burgess. Hey, Kevin. Retired Metalhead. Nice. Very cool. Ooh, Andrew. Hey, Ryan and friends drinking a margarita. I support that. I love that. Let's see. Let's keep going here. Colton finally made it to the happy hour. Happy to see you, my friend. And I'm just about caught up in the chat. So for those of you who are just now tuning in, looks like there's 150 of us right now in the stream. And if you've not done so already, be sure to hit the thumbs up on the video here if you're enjoying it as we go throughout the video. But what was I going to say? Oh yeah, so for those of you who are just now tuning in, tonight we're talking about a stock in my portfolio that just announced a crazy dividend increase. Why don't we just get into it? Before we do, any guesses? I'm sure some of you guys are going to have no trouble guessing, and I'm sure you're familiar with the news, but any guesses as to which stock we're talking about tonight? This stock announced a 14.8, I should say this company announced a 14.8% dividend increase. Okay, they are a very high growth dividend stock. This is right in line with their 5-year CAGR. They've been growing this dividend now. I think this marks the 14th straight year in a row. What else can I say about it? Any guesses as to what stock we're talking about, guys? Curious to know if you guys can guess it here. Okay. Let's see here. I see Altria. I see SnapOn. I see Microsoft, Apple. Good guesses, all good guesses. What else we got? KRC. I'd love it if KRC announced a 15% dividend increase. I'll tell you what. Let's see. Yeah, Derek says looks like SnapOn's the group favorite. I see Apple, VFC. Yeah, right. That Luis, you hit the nail right on the head, man. Gina says Realty Income. Okay, all good guesses. But guys, we are talking about SnapOn. Let's jump over the screen real quick. So SnapOn, we're gonna leave it. We'll just leave it on that screen tonight. Hopefully that's okay for you guys. So SnapOn, like I said, announced a 14.8% increase to the dividend. Really solid raise, and this is actually coming off the heels of a very strong quarter for SnapOn. And we talked about this last week too in the dividend happy hour from last week. But last week they beat on both the top and bottom line for their quarterly earnings, put some really strong numbers. And this is also very on trend with SnapOn. They have a really solid history of beating analyst expectations in their quarterly earnings. And if we go back over to Seeking Alpha real quick, I'll show you guys that. So go into the main page here, go into earnings, and let me know if for some reason the screen starts glitching or anything like that. Okay, let me know if it's slow. But anyway, scrolling down here on the earnings page, we can see for quarter after quarter after quarter after quarter, pretty much every single quarter. Well, yeah, not pretty much every single quarter, including this one, going all the way back to June 2020, SnapOn has beat analyst expectations on both the top and the bottom line. Like I said, very, very solid track record of this company. And this is only possible, getting these beats every single time is only possible through consistent growth. This company has been a really strong grower over these last few years. You guys have heard me refer to it as my favorite dividend growth stock. I just don't think this one can miss. At least, in the time that I've held it, which has been, I think, somewhere over a year at this point, SnapOn just has not failed to deliver, which is both good and bad. I'll talk about that in just a moment. But looking at this, guys, we're over here on the growth page now on Seeking Alpha. And we scroll down here, we can see revenue numbers. These are the compound annual growth rates across various time periods, year over year, all the way extended out to the last 10 years. Now, pretty much every time period, there's a lot of similarities here. We're looking on average about 5% revenue growth. Let's just say over the last 10 years, it's just below 5%. Last 3 years, the revenue growth has picked up a little bit. But what's impressive about this is look at this net income. If we go all the way down to the bottom line, the net income on the bottom line is growing at about twice the rate. Actually, if we look in terms of revenue across the last 10 years, or not in terms of revenue, if we just look at this 10-year time period, the net income on the bottom line is growing twice as fast as the top line. That's great. This is going to bode well for the dividend. And furthermore, if we look at the levered free cash flow, the free cash flow from this company across the last 10 years, on average, has grown at about twice the rate of the revenue, which once again bodes well for the dividend. The only way that they're able to make such consistent and aggressive increases to this dividend is by growing their fundamentals, by growing their financials, not just the sales, not just the top line, not just the earnings per share, but the free cash flow, because that's where the dividend comes from. These companies pay the dividend from the leftover free cash flow. There's a couple things they can do with their free cash flow. They can pay it out to us as shareholders, as SnapOn does. They can hold on to it for themselves, which they can use for various things, reinvesting back into the business, paying down debt, stacking cash in the balance sheet, just rainy day money or whatever. And likely it's a buyback shares, and likely it's a combination of all of those things. Right now, if we go over and look at these dividend stats, even with the consistent growth that SnapOn is seeing in the dividend department, the dividend is not a huge portion of this company's earnings. They only have a 35% payout ratio, so 65% of this company's earnings they're holding on to and using for other things. Which is good for two reasons. I mean, number one, obviously it's good because they're not putting all of their earnings to the dividend. They're using some to reinvest back into themselves, pay down debt, buy back shares. Well, we can take a look at that if you guys want to. I was just hoping to kind of stick to some of the higher level stuff tonight, but those sort of things. But they're also paying. Kind of lost my train of thought. They're also paying the dividend, so they've kind of got it all going on. And the second reason this payout ratio is really sweet is the dividend's not stressing the company out financially. Okay, this is more than sustainable when you see a payout ratio like this. and it allows for more dividend growth, or it allows for a more aggressive rate of dividend growth, and we've certainly seen that here. The 5-year growth rate on the dividend is about 14.6%, which is right in line with the raise that we just saw from SnapOn. In fact, the raise that we just saw from SnapOn is like 1/5% higher than the 5-year CAGR. So that's great news in my opinion. I love to see that. And that would make, they'll update this on Seeking Alpha eventually, but that means SnapOn will have been growing their dividend for the last 14 straight years. Is there anything else? I want to look at my notes here. Okay, so yeah, I guess the last thing I wanted to show you guys with SnapOn, and this is pretty quick, like a pretty quick run through. I see a couple questions in the live chat about SnapOn that I'd love to circle back to, just about what they do and a little bit more about the company qualitatively, perhaps. And so I can touch on those after this, but I want to show you guys my position real quick. So over here on my dividend portfolio tracking spreadsheet, which you guys can start using for free, there is a link to download this in the description. These are all of the different stocks that I have in my main taxable brokerage account on Charles Schwab. And here's SnapOn right here. Let me actually zoom in just a little bit more. So zooming in a little bit more, you can see I have just under 9 shares of SnapOn at an average cost that's really sweet. $211 per share with a current share price of $270.86. Now, if we scroll over here, guys, this means that I'm currently up about 28.3, not about, exactly 28.35% with SnapOn, just in terms of share price, but on a total return basis, which, you know, is probably the more important number, I'm up 33%. So SnapOn's looking really good. My only issue with this company and with this stock is that I don't have more. I'd love to add more to this position because, like I said, it's one of those that just does not seem to miss. At least since I bought it, SnapOn's just only done good. So I feel really good about having this company. Like I said, I wish I had more. It only makes up 5% of my portfolio, so there's definitely room to grow this thing. And one thing that I'm thinking about and have thought about and will continue to think about is, you know, should I just bite the bullet? I'm up 30%. I think this is a great company. Clearly the growth is there. Should I just bite the bullet and you know, acquire some more shares? You know, and in doing so, raise my average cost per share, raise my cost basis. It's very tempting because I think this is a great company. I probably will not end up doing that. I'm just kind of thinking out loud on that, but I probably will not end up doing that just because right now I'm looking at the rest of my positions here, and I see so many other stocks in my portfolio right now that I'm down on, that I can average down on and better my position. Like Johnson & Johnson, I'm down 7%. KRC, I'm down 16%. Altria down 5%. Realty Income down 8%. WP Carry down 18%, obviously AT&T and Verizon, but I don't know that I'll be adding to those. But you catch my drift. So, but it's tempting. I think SnapOn's a great company. It's one that I'd at some point love to add more to. Now, I want to know from you guys. So this has been the biggest dividend increase in my portfolio so far in 2023, as far as I can remember. But I want to hear from you guys, and I want you to tell me what's been your biggest dividend increase this year. What's been the biggest raise in your portfolio, and which stock did it come from? I'm curious to know. I'm sure a lot of you guys are going to say Visa. There's been some other pretty impressive increases this year, but I want to know that in the live chat, so let me know. Or if you're watching the replay, let me know that in the comments below. And once again, guys, there's 165 of us here in the stream right now. So if you haven't done so already, if you have the opportunity to, you know, it'd really mean a lot if you just hit the thumbs up on the stream one time. Let me know you like it. Let me know you're digging this live stream. So it you know, it's really good feedback for me. Or hit the thumbs down if you're not into it too. Either way. But I see some questions about SnapOn. Let me scroll up here. Yeah, I see SnapOn, Starbucks. Okay, so right here, Morik wants to know what does SnapOn do? What does SnapOn do? So SnapOn is a company that makes tools for various industries. Now, their most popular tools are used in the automotive industry. And let me just pull up their website, because that, once I pull it up, you might recognize the logo and stuff like that. And I'll be talking more about SnapOn in the video I have coming out Sunday. Really fun video. I had a lot of fun putting it together, so I hope you guys check it out and I hope you enjoy it. But SnapOn, if we go to the company right here, like I said, a lot of their tools are used. They're most popularly used in the automotive industry. They also have these other brands right here. Okay. Another popular one is Bluepoint. Caroliner's pretty popular. Cartech. You know, all these things right here. So they own all these other brands as well. But let me see if I can show something that, I don't know. You might recognize that logo, like I said. Maybe you can see it up here. You might recognize that, might have seen it before. You might have seen the SnapOn trucks driving by. but they sell tools for automotive repair. But they're in so many other industries as well. Let me see if I can find that. I was just looking at it the other day. So our company, our customers, yeah, let's just go here because it'll show all the different industries. So most people, don't actually realize this about Snap-on. They think they're just cars, stuff like that. But they also make tools for aviation and aerospace, so many other important industries. Collision, that's tied to auto, obviously. Construction and ag, electronics. This is kind of interesting, actually. Actually, not electronics. So heavy duty trucks and fleets, manufacturing, medical device manufacturing. This one was what I thought was pretty interesting. So the cutter of choice, Lindstrom, which is one of the brands they own, cutter of choice for manufacturers of medical devices. So maybe they make tools. Yeah, that's what it is. They make tools for companies that manufacture medical devices. Pretty solid stuff. Metal cutting, very heavy duty. Military and defense, very important industry, obviously. Mining, oil and gas, power generation, rail, so train tracks, stuff like that. Schools and students, this is big for them. They have a lot of I don't know if it's contracts or how you describe it, but they have a pretty solid relationship with a lot of the top auto repair schools and stuff like that. So a lot of those students are training using Snap-on tools, which is great because they'll go from school training using Snap-on tools, which aren't the cheapest, mind you. They're not known for being like the budget friendly tools for this sort of stuff. They're higher end, they're premium tools. They are pretty well respected, but they cost a pretty penny typically. But for good reason. From what I've heard, Snap-on tools will last you forever. But anyway, a lot of the students who get practice and training and learn using these tools will go on when they start working in garages or someday have garages of their own. It's just they'll be so comfortable with Snap-on they won't want to use anything else. So that's pretty cool. But anyway, going back over here, another interesting industry that they're in is vineyards and landscaping. I actually want to read this. So regardless of the location, Baco, probably Baco, one of the brands they own, is the responsive and dependable partner to professionals working in the world's vineyards. Within horticulture, pomology, and viticulture, professionals consider Baco the choice to get the job done. Okay. Also within forestry management, that's important, and landscaping. With top quality, durability, safety, comfort, and consistent performance. And this describes Snap-on to a T. And this is why they're not like the cheapest tools. Okay, top quality, durable, safety, comfort, and consistent performance. So what's funny too about this company, I didn't mention this last week when we were talking about their earnings, but every single quarterly earnings call, the CEO at one point has to say, boom shakalaka. That's his phrase. He says it every single time. I look for it now. Every Snap-on earnings call that I've listened to, I look for him to say boom shakalaka, and he never disappoints. It's so funny. He's like, out of all the companies I own, I'd say he's got the most fiery personality, that CEO. Let's see here. Let's keep going here. Okay. Okay, Dividend dude. Yeah, I'm unfamiliar with the company. What's the business model? Hopefully that makes sense. If you want to know more about Snap-on, we can talk about it a little bit more. I also want to ask you guys too. I'm going to keep going through these comments, but I also want to ask you guys too. How is your portfolio this week? Yesterday was a huge day for a lot of us. I know it wasn't uncommon for many of us to be up like over 2% yesterday. I think I was up 2.6% when it was all said and done. Today I was up another. We can take a look at it actually. Today I was up quite a bit as well. I think about 1% overall with both portfolios. So 0.84%, $456. And I think this is an all-time high for my portfolio right now. I think it's the first time I've touched 54K. But yeah, what happened with you guys this week? What's been your best performing stock? What was your best performing stock this week? How up were you this week overall as well? Let me know what happened in your portfolio. Fast Eddie asked, Ryan, do you have student loans? No, I do not. I do not. Thank goodness. Yeah, Colton. Snap-on trucks are like the ice cream truck when it pulls up to the mechanic shop. We all flock to it. Lifetime warranty is great for guys working on heavy equipment in our industry. That's awesome. And you know what? I was just doing some research on Snap-on a couple days ago. Just actually getting some B-roll for the video I'm putting out Sunday. And I was just on YouTube, type in, Snap-on truck. There's so many videos of like people touring Snap-on trucks, and some of the and you can become like a franchised owner of a Snap-on truck, I believe, and they'll finance the whole thing for you. That's another segment of their business is Snap-on financing. Um, well, that's primarily to buy the tools, but anyway. So anyway, some of these Snap-on truck owners have become like content creators, and they will like there's one guy, what was his name? Snappy Joe or something like that. Snappy Dean maybe. But anyway, he's like this Snap-on video creator that just drives around, shows his truck. Let me see if I can pull it up actually. Let me see. I might be able to find it. I may not. And I won't, play the video or anything, but I just wanted to show you guys Snappy Joe. Let me see. Let me see if I can find it. I might be tripping. So Snappy Dean, what was his name? And I won't spend too much time looking at it. If I can't find it, I just won't. So this is the video. What's the guy's name? Let me just show you. Okay. Go back over here. So it's right here. Oh, you kind of missed it. But you can see him like right here. This is the guy. Yeah, he's in there in the truck talking about it. But these guys just drive around in the truck all day, drive around to different garages and make some sales. And it's been a pretty, let me see if I'll show you the inside of one of their trucks too. It's pretty neat. This guy like took it to a whole nother level. Let's see. Wait for the ad to finish here. And then I want to see what happened in your guys' portfolios. So check it out. Let's go here. Oh, come on. Come on, MailChimp. Sorry about that, guys. You know how it is. Yeah, look at this. Look at all these tools. And this guy's got it organized. You can see he's got the screwdrivers on the roof and everything. Got it down to a science. So it's pretty neat how this company operates. From my understanding, like a lot of people who have trucks do so just because they obviously have like a huge. They may have been like Snap-on customers previously, know the brand and the company really well, and the tools and the product, and just loved it so much they wanted to start selling it. But anyway, let's keep going. Let's keep going. Wow. Kevin, Aflac up 19%. That's crazy. Wow. Unbelievable. Let's see. Will says, I'm trying to get to 1,000 shares of Snap-on over time. Yeah, I mean, that's how you got to do it, right? Over time. I would not mind. I would not mind if I ended up in the same boat as well. That's awesome. Yeah, Luis says, I'm looking forward to Broadcom increasing in Q4. Yeah, they've been a pretty solid grower as well. Let's see. Shade 757. Honestly, SCHD for me. It literally jumped to like $10 for me it jumped to like $10. It jumped up like $10, or what do you mean it jumped to $10? I think it's like $70 a share right now. What is it at? SCHD is now, yeah, about $70 a share. Anyway, let's keep going. Yeah, Aflac's been doing well. Let's see. This is interesting. So Tortoise says on the topic of Snap-on, I should hold for now, and if the opportunity shows itself for Snap-on, if there's any dips, jump in. That's kind of what I'm thinking too. But then we got Jarian over here. Get some more shares. Warren Buffett biases long-term companies on both the ups and the downs. I know it's tough. This is the tough part about being an investor, is knowing the best way to allocate your capital. And a lot of us have limited funds, so got to contribute accordingly, I suppose. Let's keep going here. So Dorte says, I just started buying in January, so all my dividends are the biggest ever. A yearly income now is $717. I hope to double it next year. That's great. You just started in January and your income's already $700. That's fantastic. Very nice. Let's see, the Dividend Pro. So what's your take on IVR? I feel like I just talked about this one. Someone else just asked me about this one. What? I think I liked it. No, I don't think I liked it. I didn't like it. No, absolutely not. I did not like it at all. This is a yield trap to a T. I don't even have to look any farther than this to go yield trap. 20% yield. Come on. I mean, negative 35% 5-year growth rate. I don't think so. I don't think so, my friend. Nope, not for me. Stay away. You know what? In fact, I have this in my yield trap. I just started making this the other day. I started making this this portfolio on Seeking Alpha for certified yield traps. And maybe it was IVR that prompted me to make this actually, but yeah, not going near that one. No, thank you. Let's see. Wow, Kevin. So, Ryan, I'm up 56% on Cardinal Health. Yeah, they had a really good day today, too. Should I sell some off to pick up Bristol Myers Squibb? Let's see what BMY has done because I haven't looked at BMY for a while, but I don't know. I would say no. Cardinal Health is a fantastic company. I don't think Cardinal Health even has any debt. What's the dividend stats, first of all, with BMY? So nice yield, nice growth rate. Cardinal Health. Oh, man. I thought Cardinal Health was a higher growth dividend stock than this, but wow, that growth rate's really low. But the company itself is, wow, interesting. So I didn't realize how low, how low the margins were, but yeah, tons of sounds from me right now. I guess I'm a little bit speechless. I don't like this. You know, I think that the gross profit margin's low as it is, and I'm sure that just comes with the territory of the company. But to see that diminish over time is not ideal. As you move further down the line, it's kind of the same thing. Yeah, I don't know actually. This is not very. I think I spoke too soon. This is not very comforting to see right here. Um, yeah, which I guess could explain why the dividend growth hasn't been super high, right? And according to this, in the trailing 12 months, actually, really, right here, the payout ratio is a bit high. Maybe I was tripping on the debt too. I could have sworn they had no debt. Yeah, no, I was wrong about that. Not very much debt. They've really paid down debt quite aggressively, which is good. So that is the good thing. But seeing the net income margin, seeing and everything else above that, the margins above that kind of diminish over time. That's not very comforting. So I don't know. It's tough for me to say, but yeah, after just scanning Cardinal Health a little bit more, I don't know. I don't know how I feel about that one. Let's see. Okay. Derek says up 7% this week. It was great. That is really great, man. Good job. Tortoise, my man, is up almost 5% for the week. We got Norman in the building. Keep going, Ryan. Thank you, Norman. I appreciate all your support. Appreciate you tuning in. Guys, on every single one of my videos, Norman always tells me to keep going. And I'm not just tooting his horn. Like it does keep me going, Hearing that definitely motivates me to continue on and keep pushing forward with this stuff. And we are officially over 200 people in the stream. Thank you guys so much. I love to get over 200. That's, if we get over 200 people tuning into the Dividend Happy Hour, that's a good night. Let's see here. Let's keep going though. We got Dex here says, "Hey Divi boys and non-Divi boys, what's up, Dex? Hope you're having a good day. Thank you for tuning in." Anthony says, "Was down 7% at the start of the week, down 3% yesterday. Rio Tinto was up 7%. Okay. Let's see. Will says NEP, is that one of the next era companies? Was great to me over the last 2 weeks. Okay. CA's up around 5% for the week, and best gainer was ARE. Okay. Which is that Alexandria Realty? Yeah, Alexandria Real Estate Equities. That's right. Wow. Morik bought 1,100. I'm guessing that's 1,100 shares of Realty Income, so that went up good. Yeah, wow. Good job. I bet you're rolling in that dividend income now. Let's see. Go hard, brother. I started my brokerage account back in September, buying through the October dip. Now is the first time I'm up. Well, great. That's awesome. Sounds like you kind of came into it pretty well, or at a good time. Let's see. Let's see here. I'm actually like decently. No, I guess I'm not that caught up. I'm about 8 minutes behind. Let's see. Dorte says Starbucks was the best stock this week. Yeah. Mark just passed 87K in yearly dividends. Holy cow, Mark. Maybe we should trade portfolios because that's like almost twice what my like your dividend income per year is almost twice my portfolio value. That's crazy. yeah, if you want to trade portfolios, let me know. Joyce, I'm up 5% for the week. Backwards base up 3.5% this week, back in the green. Nice. Striper Kid, yeah, okay, on SnapOn. The boxes hold their value. Sold at 32, holy cow, 32-year SnapOn box for the same amount it sold for back then. Wow. Trey here says best performer was Ally, up almost 17%. I'm not even sure I know what my best performer was this week. Let's go check it out. So going over here. Wow, okay, I had a few, oh, that's the month, excuse me. I had a few do really well this week. Intel, I did not realize Intel had such a crazy gain in the last week, up 17.25%. KRC did really well, up 13%. Starbucks almost 11%. Did I even have any in the red? I guess I did. Chevron was down about 4.6%. AbbVie was in the red, and EPD was in the red as well. Okay. Overall, really solid week. So I'll take it. Let's see. Let's keep going here. Yeah, Star Helix up 6% in realty income there for the long haul. Trey says I'm in the green 6.3% this week. Wow. Wow. Swampy Mirror's up 13.5% this week. That's crazy. Okay. Caleb, this is a good question. So, Ryan, what's your opinion on brokerages like Robinhood and Webull paying 5% interest on money you have in your accounts? Do you think most brokerages will do the same in the future? Well, some others do. So, like for example, if you let's say you deposit money into your Charles Schwab account, it's the brokerage I use. If you deposit money into your Charles Schwab brokerage account, the cash that's sitting there will actually be put into a money market fund for you while it's just sitting there. So if you're building up a cash position within your brokerage account, that will gain interest as well. Very similar, I believe, to, and I'm not familiar with how Robinhood does it, but I would imagine it's probably something similar. Unless they like loan that money out and then they're just, I don't know. But anyway, either way, you're generating interest on the cash that's in your account. So unless like Robinhood and Webull, which I don't think that this is the case, unless they both have come out with like high yield savings accounts, and I'm just mistaken. But if I'm not, like, let me see if I can even find it. So Charles Schwab money market account. Let's check it out. So let me see. Actually, I think this article right here. So let's do where should you hold your cash? Let's try that. That seems October 24th. Okay. Yield bearing savings account, money market. Okay. Might consider money market funds part of your portfolio. Man, I thought there was something that said a brokerage account. Okay, here we go. I think this is what I was looking for. Uninvested cash in a brokerage account earns interest and is available for investing or managing expenses. Holding cash here is appropriate if you plan to spend the money within a few days or would like to quickly place a trade. Assets in your brokerage account are protected up to 500 grand per investor. Okay, so that's the insurance basically. So you're getting interest on your cash in like Charles Schwab too in that brokerage account. So yeah, Mr. Redcliffe, have you ever looked at AGCO? They have grown their dividend over 22%. I have. I seriously was looking at AGCO for a moment there. I first read about AGCO. I was coming back from, I think it was over the summer. I was on a flight home from Mexico. I don't know if you guys remember me going to Mexico in like July or whenever it was. Maybe it was June. But my dad gave me a Kiplinger's magazine, and I was flipping through it on the plane ride home, and I remember reading about AGCO, and I looked into the company. It was rock solid. I think for me though, let me actually pay it a visit again because I want to say for me, I just didn't really get. I mean, I kind of get what they do, but I didn't really get it. So I think there was a little bit of just unfamiliarity to me, and I'm going to add this to their watch list. I think there was a little bit of that for me, and I probably maybe it was just one of those things I needed to spend some more time with. But otherwise, I really remember liking the company, and I think valuation was a thing for me too at the time. So but they're down 9% year to date. So, and most of those gains would have come if I was looking at it like in June, if I was looking at it like right around here, then the losses this year would have come after I first found out about it. And after I kind of initially looked into it, I really hadn't checked up on it. So in the last 6 months, let's say, down 2%. Last month, it's up 2%. Looking at the dividend stats with it, low yield, very low payout ratio, nice 5-year growth rate, 12.4%, 9 years of growth. And let's take a look. Yeah. Okay. Let me see how what the margins are doing. So margins are expanding over time. Gross margins are expanding over time. Operating margin is expanding over time as well, for the most part. Looks like the net income margin kind of has. Okay. Buying back shares. And earnings per share is going up. Dividend per share going up. Payout ratio has historically been very low. Looking at the balance sheet real quick, I just want to see what the debt situation is like. So 1.4 million in net debt, or billion, excuse me, with, yeah, that's not bad. 813 million in free cash flow in the last year. Even if it was this number on average, 400 million, they could pay off their net debt in a few years with that with the free cash flow. So that's not too bad. So yeah, I'll keep an eye on it. It's on the watch list now, but I've got some other stocks on my watch list right now that I think I would be more up my alley. Like Rollins is one of them. It's in the industrial sector as well. Really, I'm really hyped on that company. So that one's on there. I've got a few others on my watch list that I'm kind of poking around at. So let's see. Okay. Okay, it takes will. This is a good question. I'm brand new to this. Well, congratulations on getting, first and foremost, congratulations on getting started with investing. That's awesome. And you've come to the right place, my friend. So open an account with Vanguard. How do I see any dividend payments? So I've never used the Vanguard platform, so I'm not 100% sure that I can walk you through it, but in general, there should be some, I'll just show you, like, for an example on, if I go to M1 Finance real quick and log in there, let me log in. I'll show you what it looks like on one of the brokerages that I use. And for you on Vanguard, it's not going to be exactly identical, but it will be similar in nature. So hopefully this little demonstration helps. Excuse me. I'll pull up the screen in a minute, guys. One sec. Okay. I'm just logging in. Always got to do the two-factor authentication for M1 Finance. So go here. Margarita Money. This is my Roth IRA. So somewhere in your dashboard for Vanguard, okay, there should be something like activity is it for M1 Finance, right? And you'll see all the activity from deposits to buys to dividends when they come in, and you can see it's labeled, the activity type is labeled dividend, trading, deposit, dividend. So you'll see things like this. Through Vanguard, I'm not sure if you're using the mobile app, maybe there's going to be a way to, there should be I don't even know if Vanguard has an app. I really don't know anything about the Vanguard platform. But there may be a way to set it up so it gives you alerts as well whenever you get a dividend paid. So hopefully that helps. Okay, let's check out this comment. So Vicon wants to know any thoughts on the ETF high. Has been at a constant price for around 25 since its creation and yields 9.6% in dividends annually. Well, I've never heard of this ETF until now, but let's give it a look, see what's going on. So this is the Simplify Enhanced Income ETF. Okay, I'm guessing covered call ETF, derivatives such as options. So yeah, okay, that's what it'd be. Only holds government bonds. Let's look at the holdings real quick. So, maybe it would make more sense to go to the fund's website. This isn't going to tell me much. So let's just what's it called here? Let's just do this, okay? I'll take a look at the dividend stats too. Okay. seeks to provide monthly income by selling short-dated put or call spreads on the most liquid global equity and fixed income indices. The fund is intended to be an alternative high-yield solution as it seeks to provide significant supplemental income to treasury bills with low correlation to traditional credit and duration exposure. I just at a glance, I have no idea what this means. This is over my head. So just based on that, I would stay away from it. And that's something that I would say. In this isn't a bad expense ratio, I suppose. 0.51%. What's Jeppy's? Jeppy's is 0.3 something, 0.35, so less of an expense ratio. So just based on this, like just based on not even really, let me read this one more time. On the most liquid global equity and fixed income indices, like what? Let's look at this. Sorry guys, now I'm interested. Fund sells calls or puts. Sophisticated option writing algorithm sets up option. Okay. Excess cash is invested in treasuries. Okay. What indices does it sell spreads on? I wonder if it'll tell us here. Okay. Doesn't really say from what I can see here. So I'm not sure. I don't know. I'd have to spend more time with it to understand it, but from a long-term perspective, and I'm kind of starting to feel this way a little bit about Jeppy as well, even though I do have a little bit in my portfolio. Probably better off without it. That's kind of becoming my take on the whole thing. I think if you want to, I don't know. This is where I get conflicted. Because I want to say stay away from it, but that's probably like advice I should have heeded when it came to something like Jeppy. And Jeppy's worked out more or less pretty fine. Like I'm still up on my Jeppy position. For me, understanding Jeppy's was a little bit more straightforward than what I just read about high. And Jeppy's certainly more straightforward to me than something like TSLY, which is also another reason like I wouldn't even touch that one because I just don't really get it. Synthetic covered calls, it just sounds too complicated for me. But anyways, time goes on, and I see more things like this come to market. The more that I think, I guess rather a better way to put it, the more that I become aware that there's always going to be there's just always going to be a shiny object. There's always going to be the next thing. First it was like Jeppy's, then it, the XYLD, QYLD, just in this department I'm talking about. Then you had other ones come out like, Devo, SVOL, High, TSOY, APLY. So there's just so much like shiny object syndrome when it comes to these covered call ETFs that I think you'll be chasing your tail trying to keep up with all of them and invest in the latest one. And there's a couple channels out there. I'm not even going to say that actually. It's just not for me. I think in general, I'm kind of warming up to the idea that there's always going to be shiny object syndrome. Luckily, I've been okay with Jeppy. I don't ever plan to add any more, but I think that I kind of fell victim to that as well. But with that said, Jeppy's something that has worked out for me. And I was actually talking to Harris from the One Penny at a Time podcast about this earlier this week. It's more or less done what it's supposed to do. It's not been a very volatile fund. The income's gone up and down. It's kind of heading back up now. I'm still up on a total return basis, about 4%, so it's been okay. But I'm glad I tried it out and tested it out. And so I guess from that perspective, there's no harm if you wanted to throw a little bit of money. If like investing a little bit into it motivated you to research it more, then maybe try it out. But ideally, you'd research it and understand it and know how it all works before putting even a penny into it. So I don't know. In general, though, moving forward, I'm kind of just going to stick to individual stocks and straightforward ETFs. I think that there's always going to be there's just always going to be something that someone's trying to shove in your face, you know. So it just as it pertains to the covered call ETFs and you know a lot of these high yielding alternative funds, whatever you want to call them, you know. So let's see. Okay, see the same question. Yeah, go hard, brother. I think you can only buy. Where was Striper's question? Oh yeah, so Striper said, "I'm looking forward to Monday. My TD account moves over to Schwab. I can now buy fractional shares." Yeah, so Schwab has what's called stock slices, which is the ability to buy fractional shares, but it's not on every single company. It's only for specific ones. Like you can't. I don't think you can buy fractional shares of like Realty Income. I don't even think you can buy fractional shares of SCHD. So I will say that is one of the downsides to Schwab over something like Robinhood, and I hope that over time that changes. But that's the state of where it's at right now, unfortunately. But you adjust, you make do. It's okay. Yeah, Andrew. Yeah, it's perfect. Yeah. Ooh. Nah. It's like I was watching someone like fall into the Grand Canyon or something with those sound effects and just hitting rocks on the way down. That was pretty goth. Wow. I actually saw, you know what made me think of that? I saw a video on Instagram earlier today, just randomly. Someone just thought they would try and be cool, like hopped over the fence, some fence at the Grand Canyon, almost, and there was like a little bit of a ledge on the other side, you know, so it just wasn't straight down, but they jumped over this fence at the Grand Canyon and slipped and tumbled and was this close to going over the edge in the Grand Canyon. Like they were this close to becoming a part of the Grand Canyon. It was not good. Um, let's see here. Let's keep going here. I'm quite behind in the chat, guys. I'm really gonna scroll through these quickly. I'm sorry about that. Let's see. Oh, this is nice. Has anyone ever told you that you look like a better Travis Kelce? No, no one's told me that, but thank you. I appreciate that. That's nice. Let's see. Let's keep going. This is a good question. Morik wants to know, do you have a limit for how many companies you want in your portfolio? Yeah, not really. You know, I don't really have any strict set number, but I feel pretty comfortable with the amount that I have now. It looks like I've I think 22, 23 different stocks in my portfolio. Um, and I'm, you know, looking at this, I can see a few that at some point I wouldn't mind consolidating out of. But now I don't really have a set number of holdings. I don't think personally I'll need to ever get above, you know, 25. I think 25 may be the most I'd ever have, unless, you know, I get to, well, you know, this will happen at some point. If my portfolio gets to a place where once the market value of the portfolio becomes a lot larger, I wouldn't mind having an expanded number of holdings just for the sake of protecting that money a bit more. But that's the only instance that I can think of wanting to have a larger number of holdings than I do, a substantially larger number of holdings. A substantially larger number of holdings, I mean. Hopefully that makes sense. Oh yeah, Jimmy, this is a good question too. So I'm just now checking in and hope you're having a good day, Jimmy. Thanks for watching. So if you already addressed IEP, no, I haven't talked about it, but we can check it out real quick. I'm not really a fan of this company either. This is Icon. How do you pronounce it? ICANN? I always get it wrong. So IEP. This one needs to go on the list of yield traps as well, because I'm not really a fan of this one. So super high dividend yield, payout ratio minus 310%, which would mean that the company has negative earnings. The 5-year growth rate is 0.74%, but I think there's been a few reductions to that dividend. Yeah, like they just cut the dividend here earlier this year. Prior to that, though, I will say it has been pretty consistent for the last handful of years. You know, it's actually been a decently steady and in fact growing dividend prior to this right here. But nonetheless, I don't feel that great about the company. Yeah, I mean, sales have gone down over the last 10 years. You know, profit has gone down as well. And if these are going down, the net income and the free cash flow is just not going to be there either. So um, this is one I would stay away from. I think this is classic yield trap. I'm going to add that to the list. Thank you for bringing that one up. I'm looking to just keep a running list of yield traps. So just a good reminder too of ones to stay out of. So let's see. Oh, that's awesome. So Mitchell says episode 3 was good too. Thank you. I'm really glad to hear that those of you who tuned into the morning stream, I'm really glad to hear that you're enjoying that. I wasn't sure how it was going to be received, but I got to tell you what, I'm having a lot of fun doing it so far. It's been a really fun few days doing that in the morning, so I look forward to continuing that. Let's see. Let's keep going here. Yeah. What do you think? Yeah, okay. Really understand covered calls. Yeah, we're talking about the funds here. Now I'm less than 10 minutes behind in the chat. Yeah, so this is yeah, I'm with this. At the same time though, like I'm never going to be how do I say this? I don't ever want to be someone who tells other people to either to invest or not to invest in something. I just think there's things that number one you need to find out the hard way, but number two I could be wrong. I could very easily be wrong about a lot of this stuff. I'm At the end of the day, I'm someone who's only been doing this for a handful of years. I've learned a lot. I've definitely learned a lot, and have come a long way over these last few years. But I still have a lot to learn. So definitely take what I don't definitely do not take what I say as gospel. Take it with a grain of salt. At the end of the day, make whatever decision you think makes sense for you. If you want to try investing in something like TSLY or High or anything else, and you want to try out some of these what I'll call shiny objects or whatever, yeah, could work out for you. So just because I'm not doing it doesn't mean that you can't or you shouldn't. You know what I mean? So, and at the very least, I can just share what I think about it. But do whatever you think is best. No judgment from me. So, let's see. What's your thoughts on SAC or even Medtronic? I don't know SAC. Let's take a look at that one real quick. Medtronic, I haven't looked at that one for a while either. Let's say CH. SACM. Capital Corp. So seeing a high yield, high payout ratio at a glance. I don't even know what this company does. We'll take a look. Is this kind of looks maybe like it's a lender? Oh, this isn't good. Decrease the dividend. So it's a mortgage REIT. Okay. Typically not a fan of mortgage REITs. I haven't really seen any that I like. The only one that I will say is an exception that does seem to buck the trend is ABR. They seem to have a pretty solid, look at this. This is pretty nice. Nice yield, nice growth rate, nice dividend growth history. From what I remember, this company's grown pretty well too. I'm going to add this to the watch list. But this seems to be the only exception as far as mortgage REITs go that I, think is of any worthwhile quality. Oh yeah, this is a good question here too. And just so you guys know too, it's 5:58. Well, let me get caught up here in the chat, and we'll see where we're at. We might go a couple minutes longer tonight, but Unused Soldier, I've been adding $100 per week to my portfolio. Do you think that's a great start? Man, I think that's a great start. I think that's fantastic. Yeah, that's incredible. I think you'll really be able to pack a punch. You do that for a couple years, and yeah, your portfolios you won't even recognize it. So I think that's great. Good job. Let's see. Let's see here. Jim, they have called IEP a Ponzi scheme, and being a former shareholder, I can agree with that. Yeah. Let's see. Mad Chris, do you like Altry Group? I do like Altry Group. I have some Altry Group in my portfolio. It is one of the highest income generating stocks in my portfolio. I haven't bought any for a while. I'm down a little bit on my position, so I do have the opportunity to average down right now. But yeah, I do like Altria Group. I'm interested to see what happens with the company moving forward. It's something I definitely want to keep an eye on. But overall, I've been a happy shareholder of the company. Let's keep going here. Looks like we're all caught up. Got to say what's up to my man Matt, Mr. Matt Money. Hope you're having a good day, man. Thanks for tuning in. Wow, this is crazy. Up 25K in the last 2 days on that. Now I can finally not live under a bridge. Yeah. Well, sometimes that's just the most comfortable place. So sometimes you might find it hard to leave. Oh yeah, Ray. Thoughts on AGNC? No, just no. That's like top of the list in the certified yield trap portfolio. Um, yeah, I just don't know why anyone would want to invest in that one, and I'll show you why too, Ray. And it's pretty simple. It really just comes down to the dividend. And it's not all 100% about the dividend, but there's no arguing that people are going to buy AG&C because of the yield. Like this right here is, I would imagine why the great majority of people want to buy something like AG&C. But this is where you lose me. Negative 5-year growth rate, which means that the dividend's been going down over time, and 0 years of growth. That's kind of the cherry on top. If we go to the dividend history, we can see how that's played out. If we zoom out across the last 10 years, let's just keep it at 5 actually. But you can see like on numerous occasions over these last few years, they've reduced the dividend, gone from 18 cents to 16 cents to now 12 cents. And, I wouldn't be surprised if at some point it goes down from here once more. So yeah, in general, I'm not a fan of AGNC. I think it's just huge yield trap. So let's see what else here. What's PFOT? That's familiar. Pennant Park Floating Rate Capital. I'm familiar with this one. I've heard of this one. Okay. Are they another mortgage REIT too? No, asset management company. Okay. Huh. Maybe they're a BDC perhaps? I don't know. Thanks, Matt. I appreciate that, man. Back at you. I'll meet you there. How about that? Let's see. We'll make this the last comment of the night, guys. So thoughts on ESS, which I think is Essex Property Trust, if I remember correctly. Let's go check that out real quick. We'll make this the last one of the night. And for those of you who are still here, looks like there's still 175 of us. Thank you so much for hanging out with me tonight. This has been fun. It's been really cool streaming these last few days, morning and now today, twice a day. And yeah, I've really enjoyed it. So Essex Property Trust, let's first just take a look at the dividend, what's going on there. Pretty consistent. We're getting he said it's like a mini O, but we're getting a couple percentage points lower in the dividend department there. 5-year growth rate is actually higher than realty income, and the dividend growth history is actually like very similar. Realty income next year will be coming up on 30 years of growth. 28 years of growth is incredible too. So I do like that. Revenue seems to be growing pretty steadily. It looks like it hit kind of a rough patch here for a few years between 2019 and really 2021. Let's see what's going down on the bottom line. FFO is kind of the same. It's had its ups and downs, and it's been flat since like right about here. So same thing, 2019. So, but even in that period, the payout ratio didn't really change that much. It only went up to about 62%, which is not bad for a real estate investment trust, I will say. What's been going? Where's the dividend? Oh, dividend per share. And they maintain that dividend growth as well. So the dividends, about doubled, almost doubled in the last 10 years. So I do think that looks good. I will say I don't know. You know what I've just noticed too? I will say. I've been saying that a lot tonight. I don't usually say that. I don't know why I started saying that tonight. Let me go check. Just take a look at their portfolio. And oh, it's okay. Apartments, cool. What's their whole deal here? Okay. Is it all apartments? Is that what it is? Work at Essex, live at Essex. Let's take a look. Let's see if they have any here in Vegas. Las Vegas. Can I do that? No. Okay, few results. Oh, no, not in Vegas. So we're looking at Oceanside, Lake Forest. Oh, okay. So it's just apartment communities. Okay. So yeah, I don't know. I mean, different. You say it's like a mini realty income, but it's definitely different type of real estate. So multifamily residential properties. Yeah, on the West Coast. Okay. But overall, it seems like to be a pretty decent company. I think I like realty income a bit more. Another one, there was another one that I was looking at in this space though. I was looking at MAA. I want to show you guys this one real quick. Um, Mid America apartment communities, very similar in nature, but I think they're more diversified in their portfolio and in the location. I mean, so let's see if we can if it'll show us like a map. Yeah, so right here, you can see it's not just like California, it's very spread out pretty much all across the country. So most of them are over on the East Coast and the Southeast, but you got some in Texas, Nevada, um, Arizona, Colorado, whatnot. So, but I was even liking this one a bit more. I want to show you the stats real quick, and then we'll call it a night there. How about that? Yeah, so yeah, I think we're seeing a bit more consistent growth from MAA. You know, revenue looks a bit better. The growth trend there looks a bit better. If we look at the FFO, same thing. There was a gap here. I don't know why there was a gap where it didn't show the FFO. I'm kind of wondering if that's just something on like an error on Seeking Alpha's end, which would not surprise me. But the dividend growth has also been pretty impressive. They've actually pretty much exactly doubled the dividend in the last 10 years. But with that, well, no, we're looking at the FFO payout ratio. This hasn't been bad either. Pretty comparable actually to Essex. So not too shabby there. And yeah, you're getting a nice yield, very similar to ESS and about double the dividend growth rate. But the dividend growth history is not as extensive, but still 13 years. That's pretty respectable. I like that. So see if there's anything else I missed. Doesn't look like I'm all caught up here. I will answer this last question. Is the dividend from high reliable and consistent? It it's going to fluctuate, I'm sure, just because of the nature of the fund. They're selling options, so the income that they're able to generate on a monthly basis is going to vary. So it's going to go up and down from month to month, and I'll show you kind of what that looks like. If we look at like Jeppy for an example, and we can look at High. Maybe we'll just take a spin on their dividend history, but this is what that looks like over a period of time. Now Jeppy's been around for a few years, but you can see in that time period that the dividend on a monthly basis is very scattered. It's very all over the place. It goes up, it goes down, and now it's kind of making its way back up. So there's a lot of fluctuation there, and that's that sort of inconsistency in the amount of payments is not for everybody. And I think it just depends I think it depends on your temperament and if you're okay with that, and how much extra income you're generating every month. But like I said, from over a long time horizon in the grand scheme of things, I just think there's better things to invest in. Now, if you're someone, I'm trying to play devil's advocate. I'm trying to see both sides here. If you're someone who just you just want the income, like you're ready to live off that income, and you're trying to, you feel like you need to go down this direction because of that. I don't really know what to say. I can't stop you from doing that, but I do think even so, there's probably better funds. Like in this realm, I don't think Jeppy's been a bad fund at all. Let's see what the high income has done. So the dividend history, this actually has been pretty consistent though. 20 cents all across the board for the most part. So that's not bad, but I'm sure that'll change. I'm sure that'll fluctuate. But with the excess cash, what they're doing is putting it in treasury bills. So I don't know. I really haven't spent much time with this one, so I'm really not the best person to ask, but hopefully that helps a little bit. So anyway, guys, I think this is a great place to wrap it up. I got dinner waiting for me, so I don't want to keep my lady waiting. So, but I want to thank you guys so much for hanging out with me and tuning in this last, 69 minutes. Heyo. I appreciate all you guys. I really do appreciate all the support, both, tuning into the morning stream and now this one, for those of you guys who double dipped on the streams today. Couple things before I sign off. Number one, be sure to hit the thumbs up button one more time if you haven't done so already. Number two, what else? Number two. Number two, there is a link in the description to check out the most recent newsletter article from this week. Really good article. I got a lot of good feedback on it. And if you guys want to check that out, just click the link in the description. And while you're down there, click the link to join the Discord group as well. We're up to about 2,600 investors in there right now. And really solid community. It's a lot like this live chat here. It's just investors talking about dividend stocks 24/7 and other things there. It's just a really solid community of people. They're all, we're all helping each other become better investors in there and sharing the portfolios and whatnot. So yeah, definitely click the link in the description to join the Discord group. And if you do join, just tag me, send me a message in the general chat and whatever chat, at me, tag me, and just say what's up. Say, hey Ryan, I joined or whatever, and I'd love to say hi to you over there. So definitely do that. And then last thing, just be sure to tune into Sunday's video. I got a really fun one planned for you guys this weekend, and it's a long one too. This is one of my longest videos in a while, so that may be good or bad. I don't know, but you guys will have to let me know. Tune into Sunday's video. Leave me a comment there. Let me know what you thought, what you liked about it, and otherwise, you guys have a good weekend. Okay, and I will see you Sunday in the video. If not Sunday, I will see you bright and early Monday morning for episode 4 of the Walk to 100 series. So thank you guys so much once again for tuning in. All the support, it just means the world to me. I hope you guys have a fantastic weekend, and I'll see you in the next one.